It was a typical Tuesday in Tulsa, Oklahoma. An employee at the Bank of Oklahoma, a major institution with a gleaming downtown tower, had an urgent problem. A complex financial model wasn't working. It was the kind of intricate puzzle that could stall a multi-million-dollar deal. Frustrated, he walked down the hall. He didn't go to the head of his department. He went to a quiet, older man who often sat in on meetings, a man who seemed more like a thoughtful professor than a corporate titan. The man listened. He looked at the numbers. He asked a few simple questions. Then, with a pencil on a spare piece of paper, he sketched out the solution. That man was George Kaiser. He wasn't just a board member. He was the bank's owner. This small moment reveals everything. George Kaiser's career began where his father's left off. In 1969, he took over Kaiser-Francis Oil Company. It was a small operation. It was not a glamorous enterprise. His father focused on exploration, the risky, expensive hunt for new oil. George saw things differently. He was not a gambler. He was a strategist. Instead of searching for what wasn't there, he focused on what already existed. He didn't want to drill new holes. He wanted to make the old holes better. He bought small, underperforming wells abandoned by larger companies. Others saw spent assets. He saw untapped potential. He understood the geology. He understood the engineering. He used new techniques to coax remaining oil and gas back to life. He wasn't swinging for the fences. He hit singles. He hit doubles. Each small success funded the next acquisition. Growth was slow, methodical, and self-funded. He learned that an asset's true worth is its future cash flow. He became an expert at seeing hidden potential. While competitors chased gushers, he bought predictable, low-risk production. That steady income became the cornerstone of his empire. He is fundamentally a contrarian. When everyone else runs one way, he looks the other. When oil was high, he was cautious. When prices crashed and panic filled the market, he saw his moment. He used downturns to buy assets at steep discounts. Fear creates bargains for those with courage and capital. For many oil barons, the story ends there. They live and die by the price of crude. But for George Kaiser, oil was not the destination. It was the engine. The steady profits from Kaiser-Francis Oil Company were not just for spending, they were for investing. He saw his oil business as a cash-generating machine that could fuel his entry into entirely new industries. His first major move beyond energy was into banking. This was not a random choice. It was a calculated step that followed the same logic he had applied in the oil fields. He was looking for an industry that was essential. He was looking for an industry that was stable. He was looking for an industry that was, at that moment, undervalued. In the 1980s, the American banking sector was in turmoil. The savings and loan crisis had created widespread fear. Banks were failing. The market was contracting. For most investors, it was a time to flee. For George Kaiser, it was a time to buy. He saw well-run local banks trading for fractions of their intrinsic worth. In 1991, he purchased the Bank of Oklahoma. It was a solid but unspectacular institution. Just as he had done with aging oil wells, he saw the hidden potential. He believed that with sound management and a long-term perspective, the bank could become a regional powerhouse. He was buying not just a building. He was buying not just a brand. He was buying a vital piece of the community's economic infrastructure. His strategy with the Bank of Oklahoma was a mirror image of his oil strategy. He invested in technology to make the bank more efficient. He empowered local managers who understood the community. He avoided the risky, speculative financial products that were getting other banks into trouble. He concentrated on classic, boring banking, taking deposits and making sensible loans to local businesses and families. The goal was not to generate spectacular quarterly profits. The goal was to build a stable, resilient institution that would grow steadily over decades. And it worked. The Bank of Oklahoma grew into one of the largest financial institutions in the state. This diversification was a masterstroke. It created a powerful symbiotic relationship between his businesses. When oil prices were high, his energy company produced enormous profits, which he could then use to strengthen his bank's capital base. When oil prices were low and the energy sector struggled, his banking and other investments provided a stable source of income, insulating his empire from the volatility of a single commodity. This is the essence of sophisticated risk management. He wasn't avoiding risk, he was balancing it. By spreading his investments across different, non-correlated sectors, he built a financial structure that was far stronger and more resilient than the sum of its parts. If you were to distill George Kaiser's decades of success into a set of rules, they would be deceptively simple. They are not about complex algorithms or secret market insights. They are about mindset and discipline. The first and most important rule is this: master a specific niche. Kaiser did not try to be an expert in everything. He started by becoming an absolute master of one thing: reviving old oil wells. He learned the geology, the technology, and the economics of his niche better than anyone else. This deep expertise gave him an edge. It allowed him to see value where others could not. True wealth is often built on a foundation of specialized knowledge, not broad, superficial understanding. The second rule flows directly from the first: generate and control your own cash flow. Kaiser did not rely on outside investors to fund his growth. The profits from his first successful wells became the capital for the next ones. This created a virtuous cycle. It kept him in complete control of his destiny. He never had to answer to impatient shareholders or venture capitalists demanding a quick exit. He could make decisions based on a 10-year horizon, not a 3-month one. This financial independence is a form of power. It gives you the freedom to be patient, to wait for the right opportunity, and to ignore the short-term noise that derails so many others. Rule number 3 is be a contrarian, but a prepared one. It's easy to say, buy when there's blood in the streets. It's much harder to do it. Kaiser succeeded because he combined contrarian thinking with deep preparation. When a crisis hit, like the banking crisis of the 80s, or a crash in oil prices, he was ready. He had done his homework. He had identified the assets he wanted to buy, and most importantly, he had the cash on hand to act decisively while others were paralyzed by fear. He understood that fortune doesn't favor the brave, it favors the prepared. Being a contrarian isn't about being a rebel. It's about being a rational actor in an irrational market. The fourth rule is to think in decades, not quarters. This is perhaps the most difficult rule to follow in our modern world. Kaiser's greatest triumphs were the result of seeds planted years earlier or even decades earlier. His investment in the Bank of Oklahoma took years to fully mature. His philanthropic efforts, aimed at ending the cycle of poverty, are multi-generational projects. He has the discipline to invest in initiatives whose greatest rewards he may not live to see. This long-term perspective allows him to tackle bigger, more complex problems and to build things of enduring value. It is the difference between building a tent and building a cathedral. Finally, his fifth rule is to reinvest in your assets, including your people. Kaiser didn't just buy a company and strip it for parts. He bought it and made it better. He invested in new technology for his oil wells. He invested in new systems for his bank. He hired the best managers he could find and gave them the autonomy to succeed. He understood that an asset, piece of machinery, or a talented executive will only produce returns if you maintain it and invest in its growth. This rule transforms a series of acquisitions into a dynamic, growing ecosystem. It is the principle that ensures the empire doesn't just expand but also gets stronger. George Kaiser's name is on the door, but his empire was not built alone. One of his most underrated skills is his ability to identify and empower talent. He is a master delegator. He understands a fundamental truth that eludes many founders. You cannot be the expert in everything. His strategy has always been to hire people who are smarter than he is in their specific domains, and then give them the resources and the freedom to do their jobs. He is not a micromanager. He is an architect. He designs the overall structure, sets the long-term vision, then trusts his team of skilled professionals to handle day-to-day execution. This approach is a force multiplier. Consider his leadership at the Bank of Oklahoma. He did not pretend to be a career banker. Instead, he found the best bankers in the region. He supported their decisions. He provided the capital. He provided strategic oversight. He focused on governance. He focused on long-term stability. He left operational details to the experts. This created a culture of ownership and accountability. The bank's executives were partners in building a great institution. This ability to build and trust a team is crucial. It lets a vision scale into a diversified enterprise that functions even when he is not in the room. This philosophy extends beyond business. It is central to his philanthropic work through the George Kaiser Family Foundation. He did not simply write a check. He applied the same strategic rigor he used in business. He hired experts in early childhood education, social work, public health. He tasked them with finding evidence-based solutions. He trusted their research. He funded pilot programs. He let them build systems and organizations for lasting change. He acts as chairman, providing guidance and providing resources while trusting professionals to deliver results. The concrete tip: your first and most important investment is in people. Find individuals who share your vision but possess skills you lack. Don't hire assistants. Hire partners. Create an environment where they feel trusted and empowered. A single founder can create a successful company, but only a leader who builds a great team can create an enduring empire. True leadership is not having all the answers. It's about building a team that does. To understand the scale of George Kaiser's success, you have to look at the breadth of his holdings. His portfolio is a masterclass in strategic diversification. It is not a random collection of assets. It is a carefully constructed ecosystem where different parts balance and support each other. At the very center, the heart of it all, remains the company where he started, Kaiser-Francis Oil Company. It is one of the largest privately held energy exploration and production companies in the United States. It continues to be a massive generator of cash, the financial engine that powers many of his other ventures, operating quietly and efficiently away from the public eye. The most visible part of his empire is in finance. He is the majority shareholder of BOK Financial Corporation, the parent company of the Bank of Oklahoma. This is not just a passive investment. It is a cornerstone of his strategy. The bank provides stability, a counterweight to the volatility of the energy sector. It grounds his wealth in the real economy of a specific region. Through BOK Financial, he also has interests in wealth management, insurance, other financial services. This financial wing gives his empire a resilience that a pure-play energy company could never achieve. Beyond oil and banking, Kaiser has significant investments in a wide array of other sectors. He has a substantial presence in real estate and development, particularly in the Tulsa area. This includes commercial properties, office buildings, large-scale urban development projects. One of his most notable projects is a gathering place for Tulsa, a spectacular world-class public park built on the city's riverfront. This is a business investment, a philanthropic gift, a piece of civic infrastructure all at once. He also holds stakes in a diverse range of private equity ventures and technology companies, always looking for the next area of undervalued potential. Finally, there is the entity that may define his ultimate legacy, the George Kaiser Family Foundation. While not a business in the traditional sense, it is run with the same level of strategic discipline. With an endowment in the billions, it is one of the largest community foundations in the country. GKFF is a major investor in its own right, funding projects in early childhood education, community health, civic enhancement. This portfolio of businesses and philanthropic ventures is a reflection of his worldview. It is a system designed for long-term growth, stability, and ultimately, community impact. Each piece has a purpose. Each piece contributes to the strength of the whole. In the end, what is the lesson of George Kaiser's life? It is not simply a story about how to get rich. It is a story about how to build something of lasting value. His journey offers a powerful counter-narrative to the prevailing myths of our time. He shows us that success does not have to be loud. It does not have to be fast. It does not require you to court fame. It does not require you to chase every fleeting trend. It can be achieved quietly. It can be achieved methodically. It can be achieved with a deep sense of purpose that extends far beyond your own bank account. His life is a testament to the power of patience in an impatient world. The core principle that unites every aspect of his life is the idea of a virtuous cycle. He used profits from one business to create another. He used the success of his companies to fund the revitalization of his community. He invests in early childhood education because healthier, better educated children become more productive citizens. Those citizens will build a stronger economy and a more vibrant city for everyone. It is a holistic worldview. He sees the interconnectedness of things. He understands that a successful business cannot exist in a failing community. His story demystifies the process of wealth creation. It was not luck. It was not a single brilliant idea. It was the result of consistent behaviors practiced over a very long time. Learning a trade, saving and reinvesting capital, making rational decisions when others were panicking, building a team of trusted experts, diversifying to manage risk. These are not secrets. They are timeless principles. The magic is not in the principles themselves. The magic is in the discipline to apply them day after day, year after year, decade after decade. That is the real barrier to entry. So, what is the one concrete tip you can take from this? Start one small positive feedback loop today. Set aside 5% of your income into an investment account, no matter how small. Spend 30 minutes each day learning a valuable new skill you can use at work. Identify one small, inefficient process at your work and figure out how to improve it. The specific action is less important than the pattern it creates. Start a cycle where a small input today creates a slightly larger output tomorrow, which can then be reinvested to create an even larger output the day after. George Kaiser built his billions one virtuous cycle at a time. You can build your own life the same way. Small, steady steps, repeated relentlessly, are the most powerful force for change in the world.